I'm Tucker Balch. We're here at Thinkorswim by TDAmeritrade in Chicago. I'm here with Paul Jiganti, who is Thinkorswim's expert on market structure. And we're going to talk with him about how orders flow through their system. It's a very complex set of operations, and of course computers are involved at every step of the way. Paul, before we get too deep into it, tell us a little bit about yourself. What's your experience?
My experience was I was a market maker both for myself and for a large market making firm, Susquehanna, based out of Philadelphia. I was always here in Chicago. I spent my 23 years, I think, on the floor of the exchange, and then another 4 trading from an office in Chicago. So after that, I found myself here at Thinkorswim, and I work actually for the parent company, TDAmeritrade, in helping route and decide the destinations for each one of the orders that come through our doors.
So let's start from the client's desktop. I wanted to go through maybe a complex order, so we could, well, not too complex, but we could see how that flows through. So, for example, at an exchange, there's only a few types of orders you can enter. Buy, sell, at the open, at the close, limit, and market, and so on. But and I guess that is actually a lot of different types of orders. But as you get further back, all the way to the client's desktop, Thinkorswim, and I'm not meaning for this to be any sort of advertisement for Thinkorswim, but they're innovators there. Thinkorswim offers many more complex types of orders. Let me give you an example, and then we can sort of carry it through. A kind of order that you can put on the Thinkorswim platform is called a trailing stop. And what that means is, for instance, as the price goes up, your limit order goes up behind it, and if the stock drops below, that triggers an order. So when I put that order on my desktop, what happens? And let's say it hasn't been triggered yet.
So a non-triggered trailing stop will sit on our servers, which will update several times a second to how far behind the stock you want it to be. So it will stop increasing if it's a sell limit, stop limit. It will stop increasing when the stock starts to decrease. So if it's 20 cents below at the beginning of the day and it starts to fall into that stop, it will be a held order. And so when it gets to the point where it's executable, it gets shipped out to one of our market making providers.
So you've presumably you've got a server that sort of holds these orders that are in limbo, waiting to be triggered, and I guess you've got market quote information coming into that server, and it's constantly checking to see which ones are ready.
That's absolutely right.
Okay. So it gets triggered. Then what? Now, so far we're all on TDAmeritrade hardware, right?
Absolutely.
So what happens next?
Then we have a process that order will go to one of our market makers. Our market makers are, as you can see in our public reports, are Citadel or Night Trading, Citigroup are 3 of the major ones for us. And it goes out to their market making unit. What that market maker unit does is they hold that order now, or they don't actually hold it, but they represent that order with they are now the fiduciary.
So I'm sorry to interrupt.
No, that's all right.
Now this is another computer that
Yes.
If it's Citadel, it's probably in Chicago still.
Most firms as
They have them co-located.
all are co-located at the exchanges, and most of those exchanges are in the New York metropolitan area.
Now before, okay, so the order's triggered. Let's just
But
say
it doesn't do. We're not even to the exchange yet, though.
Oh, okay.
So
well, let's say it's just a stock order, by the way. Just
okay.
Okay.
So it leaves our doors. We send it directly to Citadel's home computer. Whether that home computer happens to sit in the co-located at Equinox 4, that's quite
Jersey,
likely,
right?
in Jersey.
Right.
And they will then test it against their pricing mechanism and decide what the best price is from the moment they got it within a couple milliseconds.
So best price for the
For the security. If it's let's use real numbers, it makes it a lot easier. If a stock is $10.10 bid offered at $10.11, that order, and you're trying to sell it at $10.10, that order to sell 1,000 shares it's shot to Citadel, let's say. Citadel looks at it and checks the market simultaneously, decides what price this should trade at. They know that it cannot trade any lower than $10.10 because as our provider, we've got agreements that it will always trade there, even if they have to take a loss on it, basically. And that's at its worst price. So what?
But hold on. So was that our limit?
That was your limit or market, but that was the market going in. You were sending in 1,000 shares.
Oh, so when it arrived there, if it was a market order,
Yeah.
when it arrived there,
They knew they were going to.
We can't get execution worse than what
Right.
market. Okay.
And so, and it's all within the agreements of what we have with our market makers, other destinations, other order flow providers, being
Sure.
TDAmeritrade, would have different agreements with their people. Sometimes they'll look at the market and it won't be enough to satisfy my order. If it's a larger order, that's certainly possible. Most of the time, most of our orders are about 1,000 shares of stock. Most stocks are at least that liquid. So what Citadel would do with that order is go to a dark pool. I hate the word, but it's an alternative trading system. Print it there, not at $10.10, but slightly better than $10.10.
So you just opened a whole new can of worms that our segment's running long. Let's
Okay.
give people a break. We're going to dive in a second into dark pools, and I guess that makes sense that we're in secret, right? So we'll be back.